joining us today. We're going to do our best to talk about what's going on in M&A and these home service type businesses that Cetane's working with. We do have a handful of people on the call that are our experts that are going to be answering questions from various different industries and each kind of serve in their own capacity here at Cetane. Um, Throughout this webinar, if you have any other questions, first, thank you everyone for submitting questions before. We really got a lot of great questions and should have plenty of material. But if there's anything you want us to address specifically, please use the Q&A or chat function at the bottom of the webinar, and we'll try and answer some of those questions on the fly as well. We're shooting for about 30 minutes today, so if you need to hop off at 30 minutes, please do so, and we'll just kind of see how questions keep coming in. But at this time, I'd really like everyone on the webinar here to introduce themselves. So maybe if we can pass it over, Griffin, I've got you at the top. So if you want to go first, and we can have everyone do introductions.
Sure. Good afternoon or good morning, depending on where you are, everyone. My name is Griffin Sharp. I'm a director here at Cetane, based in the northeastern U.S., and I work with sellers basically all the way through from getting an initial value estimate all the way through to selling and closing the sale of their businesses. And I mainly work in the delivered fuels, so both distillate fuels and propane spaces, as well as HVAC businesses. And beyond that, I lead the valuation group here at Cetane, helping people get valuations of their business for context outside of sale.
Awesome. Well, Joe, you're next on my screen if you want to introduce yourself.
Sure. I'm Joe Rosengrant. I've been in the propane industry for about 36 years, 22 years of that in an operating management capacity, and about the last 14 years in a mergers and acquisition capacity, working on both the buy side and sell side of things. I'm active with many of the state associations. I work throughout the country. I'm based in Madison, Alabama, and I am actively on the board with NPGA and a few different state associations, quite active. Excited to be here and looking forward to answering questions.
Awesome. Thanks, Joe. Tamara, you're next.
Tamara Kovacs I'm a director here at Cetane. I've been in the industry for 28 years, helping retailers primarily in the propane and refined fuel space. When they're ready to exit the business, help them walk through that process. Everything from, just like Griffin mentioned, that value range analysis clear through to closing the business, that whole process.
Awesome. And then Danny, you're last.
Yeah, pest lawn and landscape last. Yeah, I'm Danny Laughlin. I'm a director in our pest lawn and landscape division, I guess is what we're gonna call it. So helping people from start to finish in that. And I came from a valuation and a buy side M&A background.
Awesome. All right. Well, we're really looking forward to this. So I think at this time it'd be great, Griffin, maybe if you want to kind of just lead this one off, but in general, a lot of questions about what's going on in the M&A landscape and market in general. So maybe if you want to touch on a few things that you've really seen, maybe 2026 specifically, what we've seen in the first half of the year.
Sure. Yeah. So I think that for a lot of our delivered fuels customers, clients, it's been a good winter that we've just come out of, particularly if you're on the East Coast of the United States, which has driven earnings up and made it a really attractive environment for people to look at selling their businesses. Those of you who are in the kind of the middle of the country or further west, perhaps less so, but that doesn't mean that the environment isn't still very strong. We're seeing an increasing recognition among buyers that businesses which have kind of these, are in these non-discretionary industries, you've got to be purchasing the services year over year, are valuable. And I think that we've seen, in particular, some larger transactions in fields like propane and pest control and HVAC this year, in the billions of dollars range. Major private equity groups like KKR paying huge multiples for businesses because they're recognizing that these recurring revenue, durable income businesses are really, really, really strong. So there's been positives, absolutely. I do think that there's, with interest rates remaining a little bit higher for longer, there's a little bit of a tempering impact on that. But nonetheless, we're still seeing a lot of interested buyers, and we're seeing strong values come out of M&A processes.
Yeah, I think what's been the big buzzword of the last 12 months for sure is AI. And I think a lot of the buyers are seeing these. It's not AI proof industries, but at the end of the day, a lot of people need to do the work. And we have people going in and around homes and commercial sites to do this work. So I think that's been a bright spot. Danny, anything you want to touch on specifically on the kind of pest and landscaping side as well that you've seen?
I mean, not huge changes, especially, in the last 7 months since the start of the year. I think Hess has continued to be elevated at its, 2025 point, down slightly from the craziness that was Q4 24. But, we're seeing an uptick in landscaping, seeing a lot of volume, and, very, very strong multiples on that front, especially as they're moving down in size. You know, Historically, those
Yeah,
used to trade for not so great, and I think it's improving.
awesome. Well, I think at this point, I really like this question, but Tamara, maybe if you want to take first stab at this one, why should I have a business valuation done now if I'm not planning to sell or transition for 5 or more years?
So I think, a lot of people don't think about selling their business until there's a triggering event. But I think if you start planning 5 years in advance, it gives you the opportunity that one, you're going to see where's the valuation of my business now? What does it look like at this point in time if I were to sell right now? Is that number, am I happy with that number if I had to sell? But it also, what it can do is it can point out some areas that you may have some weaknesses in, that 5 year window will give you the runway in order to make some changes so that it will impact your valuation. Do you have a lot of one-time sales that are occurring that you're not going to get a full your normal multiple on, or is it going to be, just a one times for that because it's one-time sales? That's something that we had a client with us, he had his valuation done years prior, and that came out, and he was like, okay, so 40% of my business is one-time sales. I need to change the structure of my business. He made that change when he got ready to sell his business, probably about 7 years later. It was so much more valuable because of that one change that he made. So it gives you the opportunity that if something is pointed out, you have the time to make those changes. So
Yeah. No, I think an overarching theme that we like to say is get your house in order. And I think,
exactly.
a lot of people are very organized, but there's always some things that can slip through the crack or pointers that you can do to make sure your house is in order. So I think it's great, from the Cetane perspective, we love when people reach out early. It really feels like we can collaborate to make everything go smoother in the long run. Um, yeah, Joe, I think this is a good one for you. I know you're really doing a lot of front end stuff, but we do this value range analysis as kind of part of our Cetane process. Can you explain why you think that's a good thing for people to consider doing and what that really looks like, what we're asking?
Yeah, yeah, absolutely. I think, the value range that we provide, largely complementary to, active operators in the industry, is going to give you a very clear idea of basically what the market is doing and how your business may fare in a standard process. The value range analysis helps us identify a couple of things that you probably want to know a few years out in advance. What type of business structure? Are you a C corp? Are you an S corp? What type of tax implications would affect you down the line? How are you capturing, and Tamara touched on this a moment ago a little bit, but I'll go a little further, on your gross margins, on your propane, on your residential, on your commercial, on your other incomes? How are you representing those in your financial statements? And are you representing them in a way that they're clear so that they could be illustrated when you do go to market the business, so that you can basically showcase the attributes of the business and what is most reoccurring, what a buyer can expect to continue? Those attributes are all going to become evident to you during a value range analysis. Essentially, it's a very good tool to kind of know where you're at today and to maybe look at some of the things you're doing. We get questions all the time: is it going to help my business if I add a new IT system to it? It's probably going to help your EBITDA, which is going to help the business down the line. But what capital expenses do you want to take on now that might help you when you decide to transact? All those things would be identified during that process, and that could be exponentially helpful.
Awesome. Yeah,
Yeah.
couldn't agree more.
And I think that one thing that is a constant across the industries we work in and across periods of time is that the businesses that do the best when they're looking to sell are the ones that have had a plan in place and that have been thinking about it for longer than just, the moment in time when they decided to flip the switch. So the VRA and getting evaluation early, years early, really helps you to get that plan in place to shore up some of your weaknesses and to emphasize your strengths so that when you go to market, you kind of have an idea of what people will be looking for and really know how to market the business best and get the best value out of it.
I
Yeah,
would add, oh, go ahead, Joe.
uh, well, I was just going to say one more thing. There's as strategic as we like to be, and we're here today to be strategic. When a business is actually transacted, it's normally not as strategic as you think. Normally, it's personal circumstances or something has changed. So, doing this groundwork now is definitely time well spent, and in most cases, it's not going to cost you any more than the time that it takes to develop the materials. So, that's all I wanted to add.
Yeah. Tamara, do you have something?
I was just going to say, going through the process in advance gets you prepared to what you can expect when you actually do, doing a value range, several years early gets you prepared. What kind of information are we going to be asked? How do I need to get that, pull that information? Who do I need to bring into the fold? And I think that's really, really key because it kind of gives you a start on what you're going to need to pull.
Yeah, awesome. Well, we always get these questions. This is the big question is people are really wanting to know what multiples are. I think the first thing is it's really hard to say without knowing. Every business is different and there's some different levers that you pull to essentially add or decrease that multiple. I think it'd be great, maybe Griffin, if you want to take a stab on what a propane business looks like and what are some of those levers that make the value multiple go up or down. And then Danny, it'd be great to kind of get your thoughts too on pest control as well.
Sure. So I think that whenever we talk about valuation and value, the kind of factors that play into it are the reliability and the risk associated with the revenue and the profits that you're making. So any factor for a propane or a fuel company or an HVAC company that really highlights the recurring nature of the business will lead to a higher multiple. And so, for instance, a propane company that has a low share of automatic delivery customers and a low share of tank ownership will certainly carry a lower multiple than a company that is almost all auto and owns almost all of its tanks. You might see a 5 or 6x multiple for the former company and a high single digit multiple for the second one. And it's really making sure that your business is almost kind of not say running on its own, but the more that you can kind of make this an automated process with tank monitors and software-based routing and all of these things that help to take the question marks and the bumps in the road out of the process of earning cash. Those are the things that are really gonna press your multiple toward that higher end of the range.
Awesome. And yeah, Danny, you want to talk about any specific pest mechanisms that enhance or decrease valuation?
Yeah, okay, cool. I'm glad we're not gonna ask the multiple question. It's somewhere between 1 and 4 times rev and 0 and 22 times EBITDA. Quality moves. Yeah, I mean, we're looking at these businesses. I think something interesting is obviously it's more recurring, it's higher value on those recurring customers. How you can acquire them, like your, not to get too gritty with it, but your LTV to CAC, like what that whole analysis looks like is like, all right, you're losing a certain amount. How are you replacing them? So those are all very important. And then also what we've seen, especially on like when you look at smaller deals, is geography is a big one these days. I think geo is just like people are very much looking for like good markets. I think rural markets are really tough right now in certain parts of the country. And so I think like obviously there's always the recurring make more money, straightforward things. I think something interesting in the last, year or two that I've noticed more is geo mattering a lot.
Yeah, and I think if I'm being honest, that has been coming up a lot more. We'll have buyers reach out looking in specific areas. And there are just in general, there are some more business friendly states that people are wanting to drive, adding more business into than some others. So I think that has definitely been a huge piece. Yeah, Joe, I know you touched on this earlier, but maybe on the propane side, we had some questions about what should I be doing with my margin. I think we know the propane business especially is so margin based, but how should people be thinking about raising prices, staying in line with competitors, and what margins should they target? I know it does again vary by geography as well, but how do you feel about that?
Yeah, I think, the margin, often when you think about a margin, is it reoccurring? Is it something that somebody could expect to carry forward? Um, Timing matters with margins. Like, let's say if you have a great year and maybe you pick up, an extra quarter or 20 cents margin. Most buyers aren't going to look at that and say, well, that one year they got this. They're going to want to know what your customer losses were during that period. And did you push the margins? More looking in the rearview mirror at the last 3 to 5 years on a segment basis, residential, commercial, ag. Where did those margins, what was their cruising altitude? What could a buyer expect, and how could that margin be expected to repeat going forward? That's a big piece of it. And also, when I'm thinking about the gross margins, also about your other incomes as well. How well are they delineated with your um, tank rent, service work, things of that nature? You want to be able to clearly represent those so that they can be measured and they can be analyzed and valued most effectively.
Yeah, awesome. Well, Tamara, I think this would be great for you to really explain. I know that some things change in industry by industry, but the process is really pretty similar. I always say it's about a 6 month process that I don't think everyone knows, but can you really kind of walk through at a high level what this process looks like?
Sure, absolutely. So I think, we've talked about this quite a bit. A great first step is having that value range analysis done. Where are you right now? Is it a number that you're good with? If you say, hey, you know what? Now's the right time for me. If we can get this number, let's move forward. Then we work with you to start putting together what we call a confidential information memorandum. And what that is it's it's a positioning of your business where we get your financials, your operational history, your personnel, everything that you need to operate your business, and it showcases your company. And we use that to go out to the market. You approve the buyers that are going to look at the market or look at your business. And we allow them the opportunity about 4 weeks to look at, information, ask questions, get feedback, and then once offers come in, we, go through those with you. We do something that we call buyer meetings, and we jokingly call it speed dating, where we'll pick the top 3 to 5, depending on where those offers come in at. And we will have one-on-one buyer meetings, usually 90-minute meetings, individual, where the seller has the opportunity to sit down across each potential buyer and have a conversation, learn about one another. Who is that right fit and feel? And I think we say it's roughly about 60% of the time. Our sellers usually choose somebody based on fit and feel, not the highest number. Now, that number's got to be close, but usually it's based on that fit and feel. And we get a lot of comments. That's usually everyone's favorite part of the process, is really going through that. And then once we decide who we move forward with on that final letter of intent, we execute it. We work with you with our team of legal advisors and, the deal team. And we work through going through that due diligence, through that purchase agreement, helping you clear all the way through to closing. And in any post-closing items that we can help with, we certainly do that as well. So in a nutshell, I think you said about 6 months. I would caveat that 6 months is a very doable time frame, but that is also dependent on the seller and how quickly they move, how quickly they can get information, how quickly the attorneys can work through agreements and everything.
Awesome. Yeah, thanks for that, Tamara. Griffin, I think this is a good one for you. Is it better to sell while entering retirement years or utilize current staff to run the business in retirement years?
Yeah, I think that's a great question. And, it goes to the topic that we talked about before of having a plan for when you want to start thinking about an exit. and how you want to start getting ready for it. So I think that developing staff and developing management that can help to run the business and take more burden off of the owner, regardless of what industry you're in, is really a great step, irrespective of whether you ultimately end up selling or not. I think one thing that buyers look for and are always happy to have is management in place to continue the operation and success of the business. So whether or not you decide that you're going to pull the trigger and exit, in this year, in 3 years, in 5 years, starting to kind of push some of that authority down to develop maybe some of the staff that you already have, or even to look externally for some people that can help to serve as a general manager, or take one of your departments and just run that directly. I think that it's still valuable because you can, as an owner, make yourself superfluous, but also ensure for buyers that the business isn't going to fall apart the minute that you step away. And I think it's something that is a great step, again, regardless of what your immediate plans are.
Yeah.
One
Well,
thing,
in this one, go ahead,
oh,
Tamara.
I was gonna say, one thing I would add to that, Griffin, spot on, but one thing I would add is you're gonna want to be able to stay somewhat in touch, because when you do get ready to sell, you are going to need to be able to provide us with all that information, running those reports, or have certain members of your team be involved in that process as well. And I think that's a key.
Yeah.
Yeah.
And maybe coming off that one, Tamara, how can you explain kind of the differences of, or when maybe it's important to have the key person that's not an owner of the business get involved in the process?
That's really a personal decision. I think the most important thing is confidentiality, because this is something that is extremely important for, the process, the success of the process, is whoever's involved, that they can be confidential with the information, with, who they can talk to, that kind of thing. We've had sellers that brought in a team of 4 that they picked and said, you know what, these are my team. You're going to be working with them to get all the information and keep me in the loop. And it's been very, very successful because they were the key people who had access and knowledge of those areas. And so it made the process very, very smooth. We've had other people where they were constantly trying to do it behind everyone's back, and that it took longer, it was more stressful for the seller. So it really, it really is your ultimate decision. But if you've got a few key people that you can bring into the fold that can help you with that process, especially if you're not doing things on a day-to-day basis, in certain areas, I think it can be very beneficial. And I would have them start probably when we start that value range analysis processes. If you're going to bring somebody in, I think that would be the great time to bring them into to the fold.
Awesome. And kind of off that one, Joe, I think there's not a perfect answer here because every business and transaction's its own and different, but would a buyer expect me to stay on with the company post-sale? And should I think about training a replacement?
Yes and yes. I think, most buyers, they're going to come in with a vacuum of knowledge about the business. You as the owner have that information. So they are going to want to have access to you at a minimum for a period after the transaction closes, where they can ask you questions about different elements of things that they need to understand better. But as far as if you have a person, back to what Tamara and Griffin were talking about, with someone that you were going to involve in the process, if you have a high level person that you can involve, like a general manager or an accounting person that could be part of things, that's a very strong bridge for the buyer to basically have somebody in their wheelhouse that understands the intricacies of the businesses and the nuances that they're going to have to learn, and having a person that's part of their staff. I wouldn't attribute, a value to that, but I can tell you in any process that I've been involved in, having key leadership that will survive the transaction and be part of the new company going forward, that's instrumental, and it's huge.
Awesome. Well, we actually, and again, thank you everyone for the questions. If you have stuff that's coming to mind, we're happy to answer those as well. So we'll get those answers across to you. we're getting towards the top of the 30 minutes, so just want to make sure if anyone knows after this call, we'll send out a follow-up email with all of our contact information. If there's something that you specifically want to talk to about regarding anything that comes to mind, we're happy to answer those directly as well. Danny, I thought this was a fun one. Curious from your buy side days, but what creative ways have you seen used to finance an acquisition? Anything come to mind?
Well, I was private equity back, so I just made a phone call. But yeah, I mean, creative acquisitions, I think creative financing, I always like to say this, that the most important tool in finance is the OPM, and I don't mean the option pricing model. I'm saying other people's money. And so there's obviously the SBA if you're doing something small, but that takes a while. There's private credit, which is suffering right now, but that's a whole hour-long discussion.
Next
Private
webinar.
equity, you've got a lot more like family office stuff coming up too. Like we're really seeing the advent of the FO. They really didn't exist a few years ago, but now they're huge, and the economic reasons behind that are nasty, but we're not here to talk about that either. And so I think I would almost say like unlimited money out there. You just kind of have to know where to look. And it might come with a pretty rough rate or like an equity swap in it or something like that. Yeah, that's a really hard, um, there's no right answer to that question, but there's a lot of money out there and there's a ton of dry powder. And so I think if you know where to call, you can make it work.
And if anyone has any questions on that, I think Bob Williamson on our team has self-proclaimed himself the creative acquisition king from his days at Moyer Indoor Outdoor. So he's probably got some fun ideas as well. Yeah, I think Griffin, maybe passing over to you. I liked Danny bringing up the family office model. I think we have seen a lot more of that coming in, and it's almost a lot more patient capital. They like to buy businesses and hold them, and not necessarily exit them in a time frame. They don't. They are the investor. They don't have 1,000 LPs. But can you maybe talk about how we're seeing family offices start to look more and more at these businesses?
Yeah, absolutely. So for those who kind of aren't familiar with the term, a family office is typically you can call it an investment firm, but it's an investment firm that generally manages the wealth of one or a few very wealthy individuals, billionaire type folks. And in fact, I came from the buy side of acquisitions, and my former company was acquired by a family office. So it's typically an entity that, as Barrett mentioned, will be not looking necessarily to purchase and then retransact on the 5 to 7 year model that a lot of private equity companies are. So they're often willing to take a longer term view, still to pay good values for businesses, but then to reinvest in them and to grow them, because ultimately they're looking for long term cash flow out of the companies that they own. They want them to keep generating more cash over time and to help fund the growth of the family office portfolio. So they can be a great buyer for particular businesses that fit kind of their investment criteria, just in the same way that a local strategic might be for other types of businesses. So one of the great things about the market that we're seeing today is that there are a lot of different types of acquirers that can be a fit for almost any type of business, from, as we said, private equity or family offices, to strategics, whether they be large national strategics, mid-size regionals, or kind of down at the lower end of the spectrum. We even see some interest from wealthy individuals who are looking to just buy and own a business, or those who are backed by some level of financial capital as well, that are really almost just like transacting with a private individual. And that can be attractive for sellers who are interested in kind of maintaining the small business feel of their company even after they sell. So lots of options out there for buyers and for sellers.
Awesome. Well, we did get another live question. Griffin, I'm going to have you keep the mic for this first pass. But how are buyers handling indemnification holdbacks, and is the norm 10% for 1 year still there?
Yeah, I think so. Indemnification. This is kind of talking about what level of cash from the purchase price is typically set aside in order to cover potential liability that may be incurred from the business that's being sold. And I think the real answer is there's no kind of benchmark, or there's no everyday kind of rule for how that's set. I think 10% we have seen in some deals. I think we've also seen other deals that are, in the 25-30% range. So a lot depends on the characteristics of the business being sold. If you're a propane company, have you been doing your propane gas checks? And are you operating safely? If not, then there may be a higher indemnification holdback to account for the potential risks of tanks that are of questionable quality. But by the same token, if you're a larger company that's well established and has been doing things by the book, and has more negotiating leverage, then you may be able to negotiate a lower indemnification holdback and get more of your money right at closing. So there are definitely ranges of what's normal, but it will be dependent on the business.
Danny, anything specific from the pest side of things that maybe is different there or not really?
No, not really. I mean, of scale, you're going to go to reps and warranties insurance. I would just add that in there. But yeah, I mean, on the smaller deals, we're typically seeing a 10% neighborhood. And then to Griffin's point is, if anything's identified in diligence, like nobody can figure out how to pay their commission-based employees overtime accurately. And so we're seeing people push for higher holdbacks for that in case the IRS comes after them.
Awesome. Well, we are at 30 minutes, so just want to make sure if people need to go, please do so, and we'll have a recording of this webinar as well, so you can rewatch that after. We still have a few more questions that I think is worth answering, so if we can stick around just for a few more minutes, maybe Joe and Tamara, you guys can grab this one from the propane side, but what are the most common operational or financial weaknesses causing otherwise attractive businesses to experience valuation discounts?
Yeah, well, I'll jump in. I'll jump in first because as soon as Barrett said that, it started screaming. Tank control, knowing how many tanks you have, knowing your customer base, how many of those customers purchase gas in a 12, 18-month period, whatever the circumstances, being able to prove that. Because when you're talking about reps and warranties and some of the things that Danny and Griffin just touched on, those are attributes that could cause a business to basically go down in value if a buyer looks at it and thinks you own X number of tanks, but then they go back in and see, well, deliveries haven't been made to these tanks. These customers haven't transacted anything in a period of time. Those are things that could definitely harm a business's value. So I'll start with that and push it over to Tamara.
I would say from a financial standpoint, are your margins, when you get into due diligence, do the numbers prove out what you've, represented? I think margins, gallons, that you've delivered, are those accurate? Is your EBITDA truly reflected? We do our best job, but when you get into diligence, some things may come up, especially if you have a large amount of adjustments. You want to make sure that those are, solid, provable adjustments that a buyer can look at. I think another thing that, and I know Joe touched on it a little bit too, is safety. Do you have all your gas checks in order? Are they on file? Have they been completed properly? Do you have, lease tank agreements in place? Things like that from an operational standpoint. And I think, you get in there and it's really more of, from what's been represented, are there differences that are being found, and to what scale? And then how does that impact, the buyer's ability to close at the, agreed upon price, or are they going to ask for some kind of an adjustment?
And I think this comes right back to the value range stuff that we were talking about earlier, Tamara, with regards to things that you may identify during a value range analysis about customer concentrations, tanks, safety stuff that would come up in a value range analysis that may be something that identifies a deficiency that you need to firm up in the interim period, so that when that time comes, you've got your house in order, essentially.
Yeah, and typically, I mean, there's usually a reason behind somebody who says, you know what, there's I need to, ask for a reduction of the purchase price or something like that. A lot of times it could be something environmental for real estate. One piece of property may have a real estate issue. I've had this one particular situation where it was found to be contaminated and there needed to be cleanup done on it. What the buyer did is said, you know what, let's pull this one piece of real estate out or remove that value from the purchase price, accordingly, but still go ahead and close on the business and handle that, separately. So there are ways to work through it. I think the key is what's the finding, what's the issue, what's the monetary value to it, how do you work through it going forward?
Awesome.
And
one thing
just sorry, even just taking a quick step back from specific operational items, I think making sure that your accounting strength and bookkeeping is in order is really, really important, along with making sure that you're operating efficiently and hopefully using a modern software to kind of manage your business and your customer relationships. Both of those things are really important and help to smooth the path for buyers who are looking at a company, and make sure that they're willing to pay for a business that's operating smoothly.
Awesome. Well, you know what has been coming up more and more, it seems like, is the quality of earnings in the due diligence process. Danny, do you kind of want to do the very 30-second spiel of what that is and what you can expect that to look like?
Yeah. So a Q of E is just, I mean, you can essentially view it as them proofing the EBITDA or earnings that you put out there. Some people might include a really fun gap conversion in there because most of our clients run on a cash basis. And then you know what, this Griffin kind of brought this up, but we're talking to our larger like landscaping and HVAC clients. If you have big project-based items, like you have to do CIP accounting. You cannot just expense everything the day you purchase it and life's great and your earnings and last year are way suppressed and they're cranked in this year or whatever. So that's something that like a Q of E would find, obviously. And so they're digging in through, they're going to download your whole QuickBooks, proof your cash to the bank, make sure your revenue is real, and then they go and make sure all your expenses are real. And then they trend and bend. I mean, depending on how much you pay for your Q of E's, the buyers will have them like trend and bend too and do a lot of the like forecasting for them in that analysis. And so there are some questions that are like not really historically and they go to future. When you're going through that process, it might seem peculiar to the seller. Um,
Awesome. Well, I think we're getting close to wrapping up time. We're having some people drop off, so I think people are needing to get back to it. But I think before we kind of end and start to say, is there any last thoughts? I did have this one, maybe Griffin, you want to give first stab, is what are business owners asking about most recently? What are we hearing a lot from people?
Yeah, and it's a great question. I think outside of some of the questions that you've heard here today, one of the things that owners are rightly most focused on is kind of what's going into their pocket after tax when they sell their business. And that can be a complicated question depending on whether the transaction is structured, for instance, like an asset sale, as most of these are, or in some cases it can be a stock sale, which will have different characteristics for tax purposes. That being said, there are other solutions that can be used in some cases. If you're a C Corp, for example, we can often do a personal goodwill allocation in your purchase price allocation that will help to bring down your effective tax rate. There are, other ways that we can help to negotiate the purchase price allocation in an asset deal that will make sure that it's as favorable as possible for sellers. So that's really a big topic that I would note that I hear from a lot of prospective sellers.
I would add to that and say that a lot of times real estate, we get a lot of questions around. Do I have to sell the real estate? Can I retain ownership of it, lease it back? And I think that's really dependent on what the seller's preference is, what the buyer's preference is, and how you work through those. Because it could be, we buy some, we lease some. It's really, we see a lot of different variances there. But I think real estate also gets a lot of questions on, how do I maximize the value of my real estate that I've got?
Yeah. And I do think
And
that's a little different industry by industry as well. Obviously, propane with storage is a lot more crucial versus pest control We see a lot of people just wanting to lease actually and not buy the building. But Joe, did you have something to add there?
Yeah, I mean, as far as when's a good time, what do we see? I hear that a lot. We're in an environment that's pretty energy friendly right now as far as hydrocarbon fuels. Where we will be in 2 years from now, early election results from some of the elections that we've all witnessed, tend to be leaning the other way. And obviously, with what's going on in the Middle East, we are in an uncertain time right now. So although we do have, the positive environment that we're operating in, refined fuels is obviously in a position where they're seeing some really uphill battles, basically, and what's the future going to look like in 10 months, 12 months? Don't know. Politically, what winds are going to change in the next 24 months? That's a great question. And, whether or not it's best to wait another 3, 4 years or to try and get something done before then, it's definitely worthy of consideration and something to be thinking about. Just, I'd add that.
I think you could spend the next 2 years in DC, Joe, and you still wouldn't have the answer nailed down until
I would agree.
they
I
got
would
it right
agree.
now.
Yeah.
Awesome. Well, just our Cetane team, anything else that you want to address before we start to wrap up?
I think one thing that I would add to this is if you're thinking about the process, don't forget about your other advisors, not just people like Cetane, but your attorneys, your accountants. Get them involved. Make sure that things are in order. Make sure your real estate, your surveys are up to date. Everything's properly zoned. Things are in order, and have them get involved earlier versus later.
Yeah, I
Yeah.
think on that, it's a team effort, really, right? And we want a
It
great
is.
team to have a great outcome. And so I think having those good people, maybe not your friend that's the estate attorney, your attorney, but someone who does transactions is a great example. And Griffin touched on it, but what is my after tax? Your CPA that's been doing your books and knows your actual basis is going to have the best answer. And so that is a huge piece, right? This is a big moment of time. I always say it's a top 5 life event for a lot of people. So want to make sure that you have a great team in place.
Yeah, definitely. And I know there's, every business is going to have its own quirks and have its own specific questions based on their ownership situation or where their business is at. So for folks who, weren't able to get a question in today or who might have something that they didn't want to ask during the session, please reach out to us, shoot us an email, and we're always happy to see what your needs are. And in most cases, we can absolutely accommodate you. So, um, happy to help out anybody.
Yeah, we will send out that follow-up email with with all of our contact information. So you can reach out to us at any time. I know everyone on this call loves talking on the phone and loves talking the deal process. So we're happy to take that call at any point. Once again, thank you all for joining. This has been really great. I think I love these webinars. It's really, asking questions of us of what we do every day. And so I say it's pretty easy that we like having these. So we'll continue to have them. Thank you all so much for joining and have a great rest of your day.
Thanks, everyone.
Thanks.
Thank
Appreciate
you.
it.